Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Monday, October 9th, 2023. It's 4:06 p.m., so markets are now closed. I'll do a quick update on really stick with the equity markets. If anything else, if I do this brief enough, I'll hit on a few more things. But so far, so good. We hit that this morning under the comment section, the first post I got out to you right before the market opened on NQ. Then I followed up with the price to comparable targets for QQQ, which has now been hit. And again, that was from last goodness. That correlated with the NQ target, which I'm going to get to here in a second, from last Wednesday, I think it was. 366.71 coming in on that reaction low right here from the 19th of September. So that's been hit. Where do we go from here? Well, let's talk about that. You know, so far, as I showed you in the video earlier today, we've gotten some bullish check marks recently with the QQQ successfully defending that key 354-ish support right there for about 2 weeks. And, you know, recently on Friday we broke out. We popped above the downtrend lines and some horizontal resistance. And so that opens the door for the potential we can carry on up. And really, we parked right about on or a hair above 365 as resistance I had here on the daily chart. Then you have the downtrend line above. So I think the markets are going to want to eye that downtrend line at minimum, especially if we can pop above here. But we're not out of the woods yet. Let me show you what I'm looking at. Probably my guess is maybe a pullback in the overnight session or early tomorrow, unless the markets can power right through here. Remember, we have quite a few key stocks like Apple and some others coming off divergent lows, coming off successful tests of their price support levels or 200-day moving averages. And so you could see the market continue to come in, the buyers continue to step in. We have also seen, as expected, I told you last week I started going long Treasury bonds in anticipation that we're going to get at least a little relief rally there in Treasury bonds, which means an abatement in yields, which we got. So the offsetting factors is crude. Yeah, crude shot up last night on the Israeli attacks, but it also I don't think it's offsetting the rise in yields. I think the biggest thing right now, the market's been waiting for that just unrelentless rise in Treasury yields to slow down or reverse. And so far we've gotten that. So that's a net positive. Okay, what I'm trying to say is I think that cancels out the pop up in oil. And remember what I told you last week. Oil had already been dropping. We called the top on that a couple weeks ago. And I said it would take a little while for the market to get the memo and really realize that, you know, oil pulls back or anything in an strong uptrend pulls back 1 day, 2 days. That doesn't make a trend. I always say 1 day doesn't make a trend. But guess what does make a trend? 3, 4, 5 days, a couple weeks, 10%, double digit. And so that's what, let me just go and show you here. That's what the market finally realized, even though, again, that we're up today. See, the market is, going to be slow to react. And so, up until here, it was nothing more than just a blip, like this. This is a blip in an uptrend. And there's another blip, pullback. And then at this point, that's where, I said the market will start to then say, hey, guess what? Wow, maybe that runaway, maybe $100 crude isn't going to happen. Sure looks like it was before. We're headed there. And then, boom, here comes a 12% drop. So even though it was up today, and that's why the market started down, I have little doubt. Crude oil jumping up on that, but that was it. So we didn't really build on the gains. Most of those gains were overnight, and in USO you can see that means it gapped up as crude futures were trading up overnight. Stopped at that, what I said would be, an objective level with some profits, and it's both downtrend line resistance and price resistance there. Now, if they pop it, there's a big old gap right here to fill, and we may go up there, and the market. Again, will it react right away? Maybe not. Where the market's really going to start taking note of crude again is if it comes at and especially takes out the previous highs. So, again, I just wanted to address that. But I think, as I said, I think the bigger factor here is the abatement in Treasury yields. Here, we'll do it. Let me go to IEF. Let me look at the bond itself. There's the IEF, the 10-year Treasury bond ETF. Big reversal. And so again, no surprise that the stock market reversed some pretty big losses where we're at today, and they finally stepped in and bought. And you can see again, this is the charts have been calling for it or signaling it, and big divergences, building, oversold, and I can certainly see some more upside. I don't think it's the end of of rising rates and bonds longer term. I still think rates will go higher, so we'll watch this and we'll trade it day by day. I've gone in. If you haven't figured it out yet, you've probably seen more short-term charts, more reversals from me, and you're probably making your head spin. One day I'm long, next day I'm short, and that same day later I'm long again. Why? Well, that's easy. This is the stock market for the last couple weeks right here. This is a daily chart of QQQ, and so a typical swing trader or trend trader investor has made absolutely nothing. They've gotten frustrated, and so this is where I'll kind of go into active trading mode when these opportunities are there, and that's why I've gotten more short-term charts out to you, 15-minute, 60-minute charts, and that's why I'm, like I said recently, I'll flip on a dime if charts tell me, hey, bounce is coming, even if it's only 1, 2, 3%. It's worth it as when you're actively trading the futures. Okay, so let's just go there. Let's wrap up the indexes. So we closed at resistance again. That was a comparable price target to NQ, and I want to talk on that. NQ is just a little shy of it. This is the Nasdaq 100 futures. I'm going to give you the 60-minute chart. So from last Wednesday, this was my near-term, what I called max bounce target. I'm open to extending that target. We're a little shy of it now in NQ, but everything else, I have SPY. I'm going to show you here in a second. I just had SPY, ES, and QQQ. Remember, QQQ hit this point, the same reaction low. So I have everything else but NQ, and this is where I adapt my trading plan. So I took profits and just reversed shortly before the close today. And I think we're going to get a pullback, at most a little more upside maybe. But I think the futures will drift back tonight, and I'll show you a pat here. Let me just show it to you here. I have it marked up. NQ, it's a 3-month, 60-minute chart. Here's my 15. So this is what I suspect we'll get. 15-minute chart. This is negative divergence. NQ just made a higher high. Indicators making lower highs. PPO starting to roll over. So this is what I'm going to try to game. Pull back here. Probably get your first reaction on or around 15,110-ish right there. We get a little bounce, come down. And a max pullback target at this point in time, of course subject to change, is about 1540 right there. So that's kind of what I'm looking at right now. Again, that may change between now, tomorrow, but before I leave here, I'll make sure I have all my OCO orders. One cancels the other. That's an order with a stop loss if wrong, and a price target buy to cover and or reverse if correct. Let me show you a few other charts. ES, the S&P 500 futures. Pretty big level. I've had this one here for a while, 43.67 and change right there. You have a reaction high there, you have a reaction low, a couple of other reactions there. If that's taken out, and I suspect it will be, probably tomorrow, the next day, especially, I'd like to see, again, leaning towards, but not hardcore, not betting hard, to pull back before then and then a move up there. And then that would be even better resistance right there, about 40, almost 4,400, we'll call it. I have it at 43.99, so we'll call that 4,400 right there. And we'll probably see some sellers step in there. So there's ES. I just want to point out, ES is, as I'm doing this video right now, right on that that resistance level there. And then of course SPY as well. I already showed you QQQ hitting resistance. SPY at levels I've had here for a while, 433. And remember, there's this 433, it's colored up red because it has some significance. Back here, I created that level. When did I create that? Back in, all the way in June. Updated, I think I just colored it up red and at the end of August there. It tells me the notes. But that to me was an important support shelf that triggered a pretty powerful sell signal when taken out. So I am not married to this near-term bullish scenario. In fact, we're close. I'm going to go over a few more levels. close enough to get me to reverse and try to game a short pullback, and I may even extend that. Should the future slide overnight, I may just go to bed with stops on there and let the positions run. I'm gonna kind of continue hashing through the charts after I wrap this video up. But so okay, that was big support, and it was broken. Why? Because he had this whole like topping basing pattern. That was a multi-month pattern right there. It went from, here's June, we started there around June, back tested it here, all the way, and finally broke down in late September. Okay, so that was one thing there. There was also, as I showed you on different boards, a head and shoulders pattern right here. You can see it. This is my 60-minute. Let me go to my daily here. Let me go to that same board there. Okay, that's a little bit more clear. All right, bear with me. I'll draw it out here with these tools. So I have a lot going on here. In the S&P 500, we put in a bearish engulfing candlestick that marked the high, and that is typically a trend reversal. You look for those, they mark lasting tops. So that's number one, helps support the case for more downside, and that this bounce may get sold into. So like I said, I'm still very much open to, we just need to take out the recent lows in QQQ and SPY. And I'm still very much open to that. So don't get me wrong, just because I near term, flopped, long and bullish recently. Maybe I'll continue to press those longs. Maybe I'm going to press the shorts right now. I told you where I'm at, today. Gamed it long today, and we'll, looking for a little pullback and potentially more. So that was one thing, the bearish engulfing candle. It was also here on the all-important daily chart. It was a divergent high. We had negative divergences into that high right there. You also had, as I highlighted at the time, a nice clean head and shoulders topping pattern. That's your neckline right here. That's what NL means, neckline. Again, this was covered before. Left shoulder, head, right shoulder. The neckline broke down there. So there's the sell signal. The pattern broke down right. Let me yellow box it. There's your breakdown candle. And here's your measured target, which is right here, the widest part of the wedge. You measure from the head and shoulders pattern. From the head down to the neckline, that gives your measured target. So we only made it about halfway there. Does that mean we have to hit it? No, a measured target is an approximation, but quite often those play out. So we're below the breakdown of the head and shoulders. This may just be a snapback rally, and this red line was here. Again, I told you there's a lot on this chart. That's why it looks busy. That's your primary uptrend line off the mid-October lows. That's when the market bottom. That was the bottom in 2022 for the NASDAQ, for the S&P. That was mid-October. And then we recently broke below that, back tested. So look, there's a lot for everybody here, folks, bull or bear. And my job is to share it all. You process it. And I can tell you when I can make a pretty good case, bullish, bearish, I stay flexible. I gave you that line from the movie Heat I used the other day. What was it? If don't get attached to anything that you can't walk away from in 30 seconds if you feel the heat around the corner. And that's how I treat my positions, especially in a market like this that I really can make a case either way. Bulls have a great case to make. Employment's holding up, job market, consumers still spending, blah, blah, blah. Bears can make a great case too. So don't get married to your bias or views. This market will go one way. It's going to do what it's going to do. You can't control that. But what you can do is look at the technicals, identify the key levels and developments, and then react and position accordingly. And finally, if you don't know what to do, stay out. Banks are offering 5.5% money markets right now. And most brokers are, Fidelity, cash, you got to move it out of the cash reserves, F cash into one of the, there's a couple money market funds. There's no charge to do it. You just put your idle cash there, and other brokers have similar things too. Again, 5% plus money markets, and then watch and wait for this. Wait for the charts to be a little more clear, for the trend to be a little more clear. Right now, we're still, say what you want about it, but nobody can argue that as of now, the trend, at least from that high, the near-term trend is still bearish with a series of lower lows. And now we start going over and taking out highs, taking out downtrend lines and price resistance levels. Here's a downtrend line I'll add to SPY right now, right there. So I add it. Hold on, it's sticking here. There we go. So these are the things to watch. And so if and as each level, resistance level is taken out, especially this downtrend. You take out that downtrend line and SPY and QQQ, you will probably see that marginal new high scenario that I still have potentially on the table. I haven't eliminated it yet. All right. All right, back to that, and then we'll just look at the fangs and wrap it up here. So back to SPY, 60-minute chart. I showed you one second ago. Here, let me go back to it. So anyways, at 433, I know it turned into a busy chart, but there it is. It's pretty decent resistance and a trend line that's being back tested. So this would be, I can just tell you this, that it would be the perfect setup to just see a hard reversal and get the lows taken out. It would be the ultimate setup. It's what you need to see to get the big drops. I've been doing this long enough. You're never going to get those big crashes or mini crashes or hard drops in the market. Only come after the bulls are convinced that there's no chance of that. In other words, that the trend is bullish and they should get back in the water and start buying up longs again. And so what'll that take? Well, a couple things. Everything I've just gone over. Watching QQQ successfully defend support now for 2 weeks and starting to move away from there. Watching Treasury bonds come back. Again, is it the top in Treasury yields? Was today, or did Friday mark the top and today's the start of a big reversal? Maybe. Or is it just a dead cat bounce? Is it just a temporary oversold? I'm really looking at more so that way. I might be a little more upside in the next day or two in Treasuries, or it could be a one-day wonder. So, be ready to react if this just, again, it's simple. Undercut these recent lows, especially if we smash through them. We've already tested them for a couple weeks and moved away. I'm not going to say that QQQ has no business making another test. It could, but I think if we run back down there, it's probably going to get taken out, would be my guess. All right, finally, let me just look at the big leaders here. Apple, remember Apple reversed off tested successfully the 200-day moving average. It's been moving up since. Put in big divergent low. It's the best looking of the big fangs, and was Microsoft also had divergence, but only on the PPO, not on the RSI. You had a slightly lower low there, but it's that downtrend line resistance. So keep in mind, a lot of these stocks just come off the recent highs, and you can draw some downtrend lines. Apple, Microsoft, right there, closed right on it today. Apple, I also wanted to show you something here on the 60. Apple has some resistance coming up. You can see a bunch of reaction highs here. Reaction high. So you're coming up on some resistance levels. Even bigger resistance right around here. That was a T1. Okay, this purple line back here, that was, if you remember, again, this is active trading. We were short Apple coming into here. I reversed right there at the low. Went long personally and also threw it out as a trade idea with two targets, T1, T2, both of which were hit. And then the potential target, the top of the zone. So this was T2, this was T1. It was hit right there, and that was hit right there. And then we backfilled the gap, or close enough to it. And then went back short again, down here. And again, the case made, I had question marks here because at the time it was only potential divergence. Now I removed the question marks because that is confirmed divergence. Why? Because we made a bullish PPO crossover and we've been moving up. Okay, so it works in reverse. We still have a gap right here. We have quite a bit of resistance coming up. And again, if this is going to be a head fake rally and we start to, reverse, we take out the recent lows, I think it'll be a quick ride down to my next targets. These are still very much potential longer-term downside targets in Apple. I'm just right now on the other side of that trade, gaming another counter trend bounce again, like I did back here. All right. Microsoft, 60-minute. Okay, Microsoft on the 60-minute, you have some resistance here at about 329.60. You also have the downtrend line resistance, as I just showed you there. Alphabet, you have the previous highs as resistance. You can see that here on the 60-minute chart. You had several days, maybe even a week or so of trading right there around this 138.76-ish level. We're still above the uptrend line here. And remember, please don't forget, we're still coming off a One of the most beautiful bearish rising wedge patterns I've seen in a long time. I'll just draw it out for you on a clean board here with these lines here. You have this uptrend line right there. There's your wedge. That is a textbook bearish rising wedge pattern. I would be surprised if it didn't play out. And all this is a gap, a breakdown on the gap down. Nothing's more impulsive than a big gap down like that, and simply a back test right now. So I can tell you this. This is an objective shorting opportunity for Alphabet. You know, you can short a back test of a wedge after a breakdown. Sometimes you back test for a while. Sometimes it's one and done. You want to play it safe, be a little more conservative, wait for an impulsive red candle, a rejection off the back test of the wedge. Maybe it comes tomorrow, maybe a week from now. And then what the bulls want to see is that wedge just get recovered. So here's the trend line. I'm going to extend it for you right there. And there's the back test, give or take. Yeah, we're a hair shy of it. And I can say this, that any new high anytime soon will still simply be a divergent high. I just take this divergence line, it gets extended because the momentum indicators are lagging. So again, I think the upside is limited in Alphabet here right now, despite this kickback rally. And you know, today could possibly, because I just showed you a lot of things hitting resistance, could mark the end of just a little counter trend bounce. And of course, Alphabet holding up better than the rest. A lot of them are still well off their highs, like Amazon. Amazon holding above the 200-day exponential moving average, but kind of sucking wind compared to some of the others lately. Nvidia still just kind of moving around, slogging around sideways. Like the others, it needs to break my purple lines. Those are the most important key levels that if and when taken out, this is lights out for the market, I think, because this is the poster child of all things AI. And so I think, and I believe, was it, I scanned an article today, I think it was, and I didn't read the article, I just scanned the headline about how mutual funds, actively managed funds are chock full. This is their biggest holding right now, a lot of them. So when this one breaks, it's going to cause a lot of pain, I think, to the market. There'll be a lot of shuffling, positioning. They'll be scrambling to get out, cut their losses, or book whatever profits are still left. So, all right, guys, you can see where we're at. Those are the big leaders. And let me see. Let me pause this, see if I missed anything here. No, that's it. So silver and gold. Nice run today in silver and gold. They continue to move up recently, but could not hurt to either tighten up stops or take some profits. This too, part of this, you have the divergent lows on the 60-minute charts. I think I got targets out to you last week on Friday or something. I have to find out what board I gave them to you on. However, I can see the possibility that they might be just one more low. This doesn't feel like the bottom. It could be. And this is still potential targets to run back to where you broke down and test that. But personally, shortly before the video, I took some profits on silver. I was pretty heavy into silver coming into today. And I took some profits and I tightened up stops on the rest. Just in case we reverse. I can't make a strong case to short it here, but it's a pretty good move today in gold and silver, and that's a flight to safety, and so is Treasuries, by the way. Remember Israel's problems. I mean, this is there's always been conflict in the Middle East, but this is pretty bad. I wouldn't be surprised if they try to get coalition together, because this is outright, terrorism. They're, kidnapping women, children, threatening to execute them, went in mass. This is not your typical, Russia invaded Ukraine. They shouldn't have done it, blah, blah, blah. But they weren't, intentionally shooting women and children. So this thing's going to get sticky, or has the potential to get sticky. And, I usually don't even bring up geopolitical events, and then not to even mention the domestic political debacle we have coming up with the presidential election. So we'll see how the market takes that. And, Speaker of the House being ousted, and first time in U.S. history, but markets just shrug it off. So we'll see. All right, guys, you have the levels. Again, the news is the news, and sometimes the market will just ignore bad news, and it doesn't matter. Sometimes it ignores it temporarily, and finally it sets in. So like I said, I think active trading is the way to go. If you don't know what to do, stand aside. And but one thing I try to do is point out the areas where you have attractive risk reward. And that's been last couple of days, gold, treasuries, those good. They were really oversold at support, so there was a reason to go long those. And I'm just not convinced they don't look like the bottom yet. Right now we're gaming these kind of oversold bounces. We'll see how it develops. Stock market, I don't know, do what you want, but I have to stay flexible and nimble and in and out. And it's been good trading, last week or so with the, just hitting these little, again, micro trends. You just take a step back and look at SPY or QQQ, and that's what you see. Is just, this is a 60-minute chart, but this is boom, 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 boom. Okay, I'm gonna wrap it up here. So that's it in a nutshell. We have quite a few stocks and the indexes at support levels, which I think increase the odds over 50%. Not super high, but pretty worth maybe taking a shot if you're an active trader to game a quick pullback. And then we'll see how that goes. Even if we get it, we may wake up and the futures could just punch. Sometimes that's what happens. You're coming off a lot of strong divergent lows, a lot of support breaking. We had some breakouts last week. So sometimes you run up to these resistance levels. I have targets, and then you just consolidate there in time briefly. You have a little pause and then pop them. So I'm going to go home short right now. I'll have stops, not too far above the highs. I give you the resistance levels. We stopped every one, SPY, QQQ, ES, all hit resistance. I have NQ just slightly below. So, relatively tight stops. See if I can get a pullback, and then we'll pick it up tomorrow and go from there. All right, guys. This has been Randy Finney with Right Side of the Chart. Have a great day.